and a great story about how a sort of classic entrepreneur, which is, challenge the status quo, think outside the box, and have the audacity to try and do something that everybody says is impossible. So please welcome Suresh and Jennifer.
Suresh, I've heard this urban legend that you're this guy that came from Google and moved out to Kansas City and bought a bank. So is that true? Is that you? Why and what happened?
If you put it that way, yes, it sounds kind of corny, but the why is, when I was at Google and I was part of a team, the Google checkout team, it was clear that anytime we wanted to monetize and we wanted to move money, we always came back to the same four-letter word, bank. And I said, end of the day, in any capitalistic democratic society, if you need to move money, you have a highly regulated entity called bank, whatever you want to call it. And I said, I need to go get one of those. Because if you get one of those, you can move money. So if I know what I know now, I wouldn't have done it, but you got to be fairly brave and stupid to try that. And we actually ended up buying a bank. And it took about 2 years to find one, another year to close the deal. We signed the deal on Christmas Eve, 2008. I think my father-in-law called my wife and said, take all the money out of the joint account. He's gone crazy. Imagine that. December 2008, the regulator said I was out of my mind. I submitted a business plan that said I'll do all kinds of crazy things with the bank. We relentlessly lobbied, wrote thousands of pages of documents, or hundreds of pages, and ended up buying a bank in a really small town in Kansas that pretty much qualifies to be in the middle of nowhere. So
I understand it's a pretty innovative bank. You've got products like Move-In, Global Remit, Bank Simple. So tell us more about these products.
To get to that, what we had to do was, you're entering a very regulated environment. You want to monetize, you want to move money, and you hear a lot of complaints about banks not able to do X, Y, Z, or able to not do this, not do that. So we had to spend time understanding what it takes to do some of these things. For example, she mentioned Simple, Simple recently got sold for $100 million to the Spanish bank, BBVA. Their innovation was, how do we make a better user interface for your online banking? And we were one of the early banks to help them get started. Move-In, we have innovated where you can tap and pay. It's got some nagging tools which will tell you, if you had a budget of $50 for coffee and you exceed that at Starbucks, I'm hoping it'll tell you go to Dunkin' Donuts next time to save some money. But you can tap and pay, and you can budget, you can manage your money. And we were, I think, one of the first banks to actually go and implement a NFC-enabled sticker that you can attach your iPhone that was then linked back to your app that would then tell you where you went, how much you spent. And it's out there in the market right now, and I think it's a very cool product. But part of what leads to this question that she asked is, we found that the plumbing in the banking was old. It's like buying a 200-year-old house and you find the plumbing is still from 1800 something. So we had to find a way to revamp the plumbing. Each time we revamped a little bit of it, we could do something very innovative, something that looks like innovation because you're able to do something that the customers expect to happen. So now she mentioned Global Remit. I always wondered, isn't it the bank's role to send money globally? Why do you need a non-bank website to help you send money from point A to point B? So today we've launched Global Remit to enable that. We've started building our own pipes globally. It's a lot of work. It's this humongous amount of paperwork to do anything in banking. To open a Twitter account, I have to get a board approval and a policy and a reporting system put in place just to have a Twitter handle. So it's one of those crazy, highly regulated industry where you have a higher reward for status quo than for innovation. I don't know if that helped.
Mm-hmm. So you've alluded to the fact that banking is highly regulated and a lot of paperwork and whatnot, and coming from a technology background, what had to happen, what mind shift happened for you to get into the banking industry, and what challenges did you have to face?
It's a very good question. Yesterday I was talking to somebody who said, in Silicon Valley, rules are meant to be broken. Wrong thing to say in banking. So the first thing we had to do was, we had to agree that anything the regulator said was correct. Regardless how irrational, illogical, how out of context, and how incorrect it was, you had to agree. So that's your first constraint for innovation. So you have to agree that whatever they say is right. Next, you have to agree that whatever they tell you to do, you have to do. Because you are operating under the privilege of having a charter from them that they can pull it from you anytime they choose to. So to have the privilege of the charter, you pretty much have to agree to anything that's told to you. Yes, you have some recourse, but trust me, you are a small bank against Uncle Sam with infinite resources on time and money, and they can make their own rules and print their own money. So you had to change your mindset from, okay, whatever they say is right, and now they've given me my constraint. Now within this constraint, what can I do? How do I make it better? How do I make it faster? And how do I get the money to flow more efficiently? So we realized that a couple of basic things we realized very early on. One is that the current bank, online banking, whatever interface you have, is nothing more than an electronic version of a paper ledger from 300 years ago. Now, the bank account itself is not very smart. It just shows you what's in a database entry. Then we realized that what you call the database entry, DDA, checking, saving, suddenly drives like hundreds of pages of rules. So you got to be very careful what you call that money in a banking system. Then we found that existing systems could not call it anything else other than what is allowed or what they've done for the last 20 years. So we couldn't create new types of accounts. We said, okay, we will build the account of the future. So we started to build our own platform where we can configure, create any kind of account for any kind of context. Because we found that if you change the context in which you move money, suddenly you have like 3 other government departments that want to know what you're doing. So one day I woke up and realized I'm an unpaid informant with personal criminal liability to the government. Because if I don't inform on what they want me to inform on that, I go to jail. Or at least they threaten that, right? They kind of allude to that. And I'm also an unpaid enforcer. Actually, it's the other way around. I pay them fees, and I have to enforce what they tell me to enforce. Right? And it is true, right? It's kind of a very, if you think of it, it's a very weird situation to be in that, but then you realize I can apply technology to these things. I can apply technology, I can redesign the system in a way that I can actually make this happen without me having to be constantly watching systems and reporting and et cetera, et cetera. So we realized that the bank account itself is flawed because it was designed many years ago, 50 years ago, whatever it is. It has to be redesigned. So that's what we have done. We have actually redesigned the bank account. We're rolling out those platforms. It's very refreshing. You don't need to go to a non-bank player. I mean, I would question the existence of non-bank players if the banks can do what they're supposed to be doing. The existence of non-bank players is more of a symptom of the fact that banks have not been able to innovate. And one of my first thoughts when we bought the bank was, I felt like a McDonald's franchisee without the McDonald's brand name to my core system. The core, there are about 5 major software technology providers to banks in this country. And those 5 are bigger than most banks. And your bank's features, products, are limited by what those 5 guys tell you can do. And those 5 guys want to make money when you make money, but they want to make money when you lose money too. right? And they want to make money when you grow, but they want to make money whether you grow. If you don't grow, they still charge you. And you go to them and say, I want to change something, they don't care. They're bigger than you. They're bigger than most banks. So that's when I said it's like becoming a franchisee of somebody, except with McDonald's, at least you get to use the brand name. In this case, you have liability as well. So we had to undo that. So it took several years to get rid of some of those legacy issues and start to rethink how we want to put out the platform.
Great.
Yeah.
Okay. Well, thank you. So this session is called Bringing Innovation to Monetization. So what advice would you give the audience out there to help them change their ideas and bring them to market?
Well, I came up with some simple constructs for me so that I could explain it to myself what I was doing in the middle of nowhere in Kansas. Big sky, it can be fun. It turns out, end of the day, banking is nothing more than a store of value with many ways to put money in, many ways to take money out. All these semantics aside, checks, credit cards, whatever. End of the day, all you have is a bank is a trusted entity that stores money for you as a customer or a business and helps you put money in through many channels and helps you take it away and spend it or give it to somebody else. Now, the channels in which you bring the money in drives a whole bunch of compliance, whether it's coming through a check, there is rules, like thousands of pages of rules on how to handle checks, whether you bring it through wires, whether you bring it through ACH. Each one drives pages and pages of rules that are in place to protect the consumer and protect the system as a whole. So we said, look, if that is what it is, we really want to make sure that we can support any ways of bringing money in, any way of taking money out of the bank with any kind of rules. And that's where arose the concept of context-aware account that allows conditional payments. And she brought up monetization. And some of those things are a big need. For example, we hear about Airbnb, wanting to do micropayments with escrow services when you rent a place through them. That's a great example of a contextual and conditional payment at a micro level that banks are not able to handle. So somebody like Airbnb had to go out to Braintree or make that happen. Is that a feature a bank should offer? Yes. Have they been doing that for hundreds of years? Yes. That's what a letter of credit is called. When a manufacturing company supplies to a big supplier or vendor, they have a letter of credit. Well, that's what Airbnb needs. But they couldn't bring it down. They couldn't bring the system down to do it for $20 because those 5 big core systems didn't see it and they didn't want to offer it, so these guys couldn't offer it. Can we do that soon? Yeah, we are there. We can do that. So if you go on and look at all these symptoms that are, Silicon Valley is struggling and straining and saying, we built all these great apps, we built this, we need to monetize. We need to make money because anything multiplied by free happens to be 0. So you have to charge something to make money. And that means you have to get payment on the spot, whether it's in-app or whether it's at the time of a condition being met or a complex set of conditions being met. You need to be able to do a single click and collect money or send money. And you have all these third-party startups that are discovering various channels of sending and receiving money and starting to build apps. So we initially thought about opening some APIs to done that. We've done it in a very, very selective basis because we discovered that there is a whole section, and you guys can Google it, called third-party risk for banks. If I let a third party into the bank, I'm fully liable, responsible for anything the third party does, which means I have to not only worry about that, I have to supervise, make sure at all times they don't screw up on me. So we've opened it up. We have launched. Our systems are now part of some of the companies I mentioned. Not all of them, but some of them are starting to use. We are supporting instant payment in the US now. Domestically, we can send money near instantly, meaning in a minute, into somebody's bank account. Square is offering, it's not ours, but Square is offering free, and we once again came to the conclusion we didn't need a spreadsheet that free multiplied by millions of users is still 0. So we are offering it to companies that are willing to pay us for instantaneous disbursement of funds. So in terms of monetization, you'll find that the larger players, which is Apple, even Microsoft at some point, Google's got Google Wallet. They will soon start offering monetization opportunities. They'll soon start offering APIs that they already not do. PayPal is doing some of that. But monetization at the micro level, at in-app level, we think it's going to get more transparent, more easier to do. I think we'll be one of the players in doing that as well. And also in being able to issue complex products. For example, one of the things I hope to be able to do this year with a lot of glee is being able to give a gift card to my kids, my daughter and my son, and say, okay, you can only use this gift card at Baskin-Robbins next to the library only between 1 and 2 o'clock on Tuesdays. So I can drive behavior. So I want to be able to do all of that, and we're going to see that happen. We'll have a smart account that will say, okay, all my bills, this is the only country where you have 2-channel bill payment. You get a bill in a mail or email, then you go to a banking system to write down how much money you want to pay. We hope to solve that very soon where, why shouldn't your account not pay your bills and let you know if it's over and above a certain threshold, and if it's out of whack, it lets you make a decision whether to pay it or not. You don't have to go get an email and enter it or look at it. So the account needs to get smarter, more intelligent. So we hope to be able to launch that. We have it it's in a proof of concept. We're working on it. That's the other headache with banking. You cannot go launch a beta with 2 guys in a garage. You have to get it tested, third-party tested. You have to make sure the regulators are okay with it before you can even roll it out into a bank. So I don't know if that helps. Mm-hmm.
I think any final words about the future of money movement?
Well, in the future, really, what we all want is instant gratification, right? You want to be able to click on something, and you want the money to go 10,000 miles and safely land in somewhere else, or you want to click and pay, or you want to click and pay 500 people, or 5,000 people, or 500,000 people. You want to impose conditions on the money as it goes through the system. And you're going to see all of that happen very shortly. People are building out the systems. As a banker, unless I have a death wish, I'm not going to put out press releases on what I'm doing, because I have to then answer to a bunch of bureaucrats in some part. So we don't. We can't do vaporware. So we have to build, test, launch, and then say we have it. So it's one of the ways in the banking world. That's why you don't find any press releases or knowledge on the web that says they're building something. Usually you'll see it after it's done. So that's what you're going to see coming down the pike. And you're going to see a lot of innovation in banking. At least the bankers I talk to, the peer groups I talk to, everybody's aware of what the needs are. And you'll see that it's slowly percolating into banking very quickly.
I think that's it.
Good. Thank you.
Thank you.